should I file? Know if I even need to file. And I just started, I didn't make money, what should I do? We're going to answer all those questions for you today. Feel free to write down your questions because I am, again, going to leave time aside for you to be able to ask your questions. All right, guys. Well, I'm going to hop right in. It's very important to me for you guys to understand who you're hearing from, kind of what gives me credibility to even be on this platform today in front of you, and just to know who's talking to you. We're going to get into some pretty intimate things about your business and your finances today. So I'm just going to share a little bit about me, who I am, and what brings me before you today. So I'm going to go ahead and share my screen with you guys, and we'll take it from there. All right. So many screens. Let's see. Okay, so first thing that you guys need to know about me is that I'm not just an accountant that sits home and crunches numbers. I am a dog mom. That is probably the highlight of my life and what allows me to be able to smile and laugh outside of these numbers. So I'm a dog mom. I love to travel. I am an auntie, so I have two amazing nephews that bring me so much joy, and I am a wife. So that's a little bit just about me outside of taxes. I'm going to zoom through this pretty quickly, but I just want to make sure that I'm sharing with you guys a little bit about me. So I started our company in 2019, which a lot of us have started our companies around that time, 2019, 2020, as the pandemic was beginning. But I started right at my dining room table, which a lot of you on here might be able to relate to. Started at home with a laptop and a cell phone and decided to leave corporate America and start studying taxes. By January 2020, which is only about, 30 days later, I was shooting content in my living room, in my dining room, making it look as professional as possible. Again, I'm sure a lot of you guys on here can relate to that beginning startup process and just really hoping that people are going to connect with what you're passionate about. At the time, I was studying taxes and accounting and just really reaching out to people who were starting businesses. This part here is important because there may be some of you on here who are also interested in understanding how your accounting and taxes impact real estate. So once I finished my very first tax season, I decided to take that money and start investing in real estate. We began to purchase properties all across the city of Philadelphia right during the pandemic when everyone else was saying don't purchase. And we even purchased our own commercial property right here in West Philadelphia. We did that with the help of a CDFI called the Reinvestment Fund. And today, as I'm talking to you guys about your taxes and bookkeeping, you will begin to understand how all of those things are very, very important when it comes to investing in real estate and deciding whether or not in your taxes that you want to take a loss or a profit. I also wrote an ebook because at that time, so many people were talking about walking away from corporate America and how do you do it. So I'll share that link with you guys, but it's just a quick snapshot of what I did. This is just a little bit about one of our state representatives, Joanna McClinton, coming out to our ribbon cutting and us adding a huge team of people that were now able to impact the community and service all 50 states nationwide. You don't need to see that. That's just me dancing. But this just shows what our building looked like in 2020 when we brought it and what it looked like in 2021. I'm showing this again to show you guys who you're speaking to and more importantly, how you guys can also do it too. I want you to be encouraged on this call today. I started at my dining room table, and this is what our office looks like now in West Philadelphia. We're right on 59th and Chestnut, and we love having people come in. We use this office to service our community and offer all kinds of workshops. I think that's enough about me. Let me stop sharing here. Okay, so now you guys know who's talking. Let's get into some numbers. So let me just put this on here. And there. And let's see. I probably didn't hit stop share. Can you guys see my screen that says entrepreneurship and taxes? Let's see.
Not yet, Jarde.
Not yet. All right, we're working on it. Here we go. We should all be like professional Zoom people at this point, right? Ay, ay, ay. 3 years ago, I didn't know anything about Zoom. Okay, from beginning. Yep. Okay, here we go. All right, can I get a thumbs up from anyone that you can see the screen? Okay, perfect. Thanks, Marsha. I can see your thumb. Okay. All right, so let's get into it, guys. So first things first, do I even have a business? How do I know if what I'm doing is actually considered a business? How do I know if the IRS even thinks it's a business? That's very important. So the way the IRS determines whether or not you are considered a business or not has a lot to do with whether or not you have an intention to make a profit. Okay, so I'm just going to run that back one more time. Do you have an intention to make a profit? Let me give you a quick example. So say you're someone who really enjoys making jewelry and you're like, this is great. I love this. If somebody buys it, great. If they don't, I could care less. I genuinely enjoy this, right? Well, the IRS considers that a hobby. It's not necessarily considered a business. A business means that you have an intention to make a profit, you're accurately keeping records, and you are doing business activities that are going to lead you to be profitable, okay? Now we're going to spend a little bit of time on this slide because this is the number one question that I get throughout tax season as my clients are coming to me. The first thing they're saying is, Jarde, this happened in my business last year. Do I even need to file? Okay. So there's a big difference between do you need to file and should you file? Okay. And I'm going to walk you through the difference. So the first question I have for you is, did you receive payments of $400 or more from a company or individual? If the answer to that question is yes, you received more than $400 last year, 2023, then technically the IRS on their website says that you should be filing a business tax return. Okay? Now, should you file a business tax return? All right? That $400 that you made, the IRS is not aware of it. Okay. The only time the IRS is actually aware, and you guys may have seen some of this stuff on Instagram, but the only time the IRS is aware of money that you're making is when it's being reported. So the second question that I asked you on the slide is, did you receive more than $20,000 or more from a third-party provider? So that's like a PayPal, a Stripe, Venmo. Some of us were receiving payments via Cash App or credit card payments. Did you receive $20,000 or more? If the answer is yes, you will receive a form called a 1099-K at the end of the year. And that means that that money has been reported to the IRS and you absolutely have to file. If you don't, you will not be a happy camper. You will be calling me in 6 months saying, Jarde, what is this letter in the mail from the IRS? So if you receive more than $20,000 or more, yes, you absolutely have to file. You should log into your Venmo, log into your PayPal, log into your Stripe, download your tax document. It's going to be called a 1099-K. Okay. Now, if you receive less than that, say you receive 15,000, you are not going to receive a document, and that means it is not reported to the IRS. Okay. Now, I'm fully aware that this call is being recorded, but I do not work for the IRS. So I work for you guys. So I'm going to be very upfront and transparent. The IRS does not know that you made that money. So technically, you don't have to file it, but you should. And the reason that you should is because it is your business record showing that you made money. So for example, say that you go to apply for a grant next year, or you want to apply for something in your business name. You want to get a car in your business name, or you want to purchase a building in your business name, or you want to get a line of credit in your business name. Well, you can't go to your Cash App and start scrolling and say, hey, look at all this money I made. They're going to ask you to provide your tax documents. And so although you didn't meet the threshold of 20,000, and although you didn't receive a 1099-K in the mail saying that you had to file, as a business owner, it makes smart business decisions to file because you're showing a track record of you making money in your business. Okay. So I do have, for example, this morning I had a client who only made $3,500 in her business in 2023. And she said, Jarde, I don't think I'm going to file. She said, I'm not going to apply for anything in 2024. I don't think I'm going to meet my tax documents for anything. And I don't really know if I'm going to be pushing to grow the business. Well, technically, she doesn't have to file. The IRS doesn't know she made the money. And she's not going to need her tax return for anything. However, if you are looking to grow your business, which if you're on this call, you probably are, I highly recommend filing, even though you don't meet the threshold of the 20,000. Okay. And let's be very clear, ladies. And wait, do we just have ladies on the call? I'm not sure. But let's be very clear that just because you're filing your business taxes does not mean that you're going to owe money to the IRS. So I know you might be freaking out. You might have a little anxiety. You might be like, oh my goodness, am I going to have to pay taxes on this 5,000 or this 7,000 that I made? Not necessarily. And we can talk through what that strategy looks like, okay? So I'm going to go through one more slide and then I'm going to open the floor to see if anyone has questions about what I just talked about. So let's go through one more. All right. So let's look at how to file each business entity. This is another major question I get during tax season. Do my business taxes and my personal taxes get filed together? Well, that depends on what type of entity you have. So I'm going to talk you through each one really quickly. If you're a sole proprietor, meaning you have not registered with the state to get an LLC, you do not have the EIN number, you are just operating your business under your name with your social security number, you are a sole proprietor, and yes, your personal and your business taxes get filed together. They are due April 15th, and you will file a Schedule C. If you're a single member LLC, that exact same rule applies. A single member LLC means you are the only person that owns that business. You are an LLC, you are registered with the state, you will file a Schedule C, your business and your personal will go together, and it's due on April 15th. If you are a partnership or an S Corp, meaning 2 people or more own your company, you will file Form 1065. Your taxes will be filed completely separately from your personal taxes. I'm going to say that again. If you're a partnership, meaning more than one person owns your company, or an S Corp, your business taxes will be filed completely separately from your personal taxes, and they are due March 15th. Last but not least, if you are a C Corp, you will file Form 1120. Your taxes are due April 15th. And once again, the C Corp is filed completely separately from your personal taxes. I'm going to pause and take maybe 1 or 2 questions, and then I'm going to hop back in, and I'm going to pause to take questions again. All right. You guys have some great questions. I love it. All right. How to file. Okay, so we're on to the next screen. Let's see. Right, Zoom, get out the way. Perfect. Okay, here's how you can support your position that is a business. So once again, we were talking, as a matter of fact, this lines up with your question that you just asked about being able to take a loss when I didn't even generate income, okay? So in the event that you did decide to do that, one is you wanna have your business licensed or listed as an entity. So if the IRS were to ever audit you and say, well, you didn't buy that laptop for business, how do we know you brought it for business? These are some things you can do to make sure that your records are in order. Keep good records, and we're going to talk about some different options such as QuickBooks. Have a business checking and account and credit card. That's major, that's huge, that will always put you in a good position when you're going through an audit with the IRS, that your payments came out of a business checking account or credit card. I want you guys to also record time that you spent working the business. Especially if it's a startup, especially if it's not your full-time gig, definitely make sure you have something that's showing how much time you're spending in the business. This is what I do full-time. So there's not really a need for me to document how much time I'm spending in the business to prove to the IRS. All right, guys, let's keep moving. So how does the tax code benefit you as an entrepreneur? So this is the good stuff. And I want to explain it as clearly as I can. But long story short, if you are still working your W-2 job and you are self-employed, you are technically in the best position from a tax standpoint. Okay? So we have people who are just W-2 employees, you have people who are just self-employed, and then you have people who are both. The people who are both are in the best tax position. The reason is because on your W-2, you have already been paying federal taxes all year, okay? On your self-employment income, you haven't paid any taxes all year. When you put those two together and you actually have a loss, meaning you spent more money on your business than you made, we have the ability to boost your refund up dramatically because you've been paying taxes all year and you took a loss in your business. When you're just self-employed, well, like me, we owe money every year. And the question is, how can I get that number as low as possible, right? We're not talking about a refund. We're only talking about what we owe the government because we haven't paid taxes all year. And my job as an accountant is to get that number as low as possible. But there's nothing to refund me because I didn't pay anything into the government. When you're just a W-2 employee, well, you've been paying taxes all year, and yes, you're probably owed a refund, but you're just getting refunded your own money that you've already paid. So that self-employment and W-2 is the best combination. So for those who are still working their job and they're like, I'm trying to be full-time in my business, I understand, but from a tax standpoint, you're actually in the best position. And we can once again talk about that one-on-one in a tax consultation together. Okay, so when I'm referring to self-employed and owning your own business, I'm also referring to 1099 workers. So that's somebody that might be driving for Lyft or Uber, or you're a contract worker and you're being paid on a 1099. That's all considered self-employment income. And that's all income that has not been taxed yet, which is why it's very, very important if you receive any self-employment income to definitely connect with a tax professional. Because our job is to make sure we're saving you as much money as possible on your taxes and that you're not paying Uncle Sam, this person that I've never met before. I'd rather pay somebody that I know. It's something about paying people that don't have a face. Like, I don't know about y'all, but that just gets to my soul. So our job as a tax professional is to save you as much money as possible. I will share my contact information at the end and give you guys the opportunity to book a free consultation. These are some common deductions for businesses. There's hundreds more. Right now, the tax code is highly in favor of business owners, meaning there's tons of stuff that we can write off as business owners, especially as long as it pertains to our business, we can write that off. But it's important that you have good record keeping so that you can defend yourself if you were ever audited. But the tax code is written to benefit business owners, meaning a W-2 person doesn't get the chance to say when they pay taxes and how much. It just comes out every 2 weeks. A business owner, we get to determine when we pay the taxes. I can pay them quarterly. I can pay them every 2 weeks if I want it, or I can wait and pay them at the end of the year. So I get to determine when I pay, and I get to determine how much I pay in taxes because I determine how much I write off versus what I don't write off. That's pretty powerful. And if you're doing it right and you're hooked up with a great accountant, this can be very powerful, especially as far as starting your business and having extra cash flow in your business. So I want to make sure you guys, before you get off this call, that you guys clearly understand this document in front of me and in front of you. This is called your profit and loss statement. And when you get off this call, if you don't know anything else or heard anything else, I want you to be able to clearly say, I know what a profit and loss statement is. So taking all the accounting jargon out of it and just keeping things in very layman's terms, a profit and loss statement is essentially what came in your business minus what went out your business. Once again, a profit and loss statement is what came in minus what went out. And the bottom number, that net income number, is a fancy word for what's left over. Okay? So if you're taking notes, net income equals what's left over. And as a business owner, you are not taxed on what came in, right? At the top, it says sales came in, what is that, $100,000. And then they took some more money in. So total revenue, this company made $113,000 last year. But the powerful thing about being a business owner is that you are not taxed on that 113. You are only taxed on, if I could hear you guys in the crowd right now, I would hear you say, what's left over? We're only taxed on what's left over. And that's how we have millionaires and billionaires. Some may have been our president, I won't mention any names, who make millions of dollars. Nope, let me say billions, who make billions of dollars, and they legally write off millions and billions of dollars, and they only pay taxes on what's left over, which is why a millionaire can actually be paying way less taxes than our W-2 workers working at Target, CVS, and the city of Philadelphia. And they legally do it because they keep accurate records, they invest in an accountant, and they make sure that they're legally writing off everything that pertains to their business, which means they're only taxed on what's left over. Okay, so this is just a snapshot of a profit and loss statement. If you don't have one, I have emailed you guys. You received the email from Elliot earlier. I'm giving you guys a profit and loss template that you guys can use to start building your own profit and loss statement. Because in order to file your business taxes, you're going to have to provide a document to your tax professional. Okay, so I just kind of got ahead of the game, assuming that I'll get to meet some of you guys one-on-one, and said, let me get you guys a spreadsheet now, start filling in your numbers now, so when we get on our call, we can save a lot of time and just cut right to it. The Excel spreadsheet that you guys have is something that you can use to go through your business bank statements and start to categorize what you spent and what came in. The best way to actually handle that is to use something called QuickBooks. And for those who don't have QuickBooks yet, yes, you can use a spreadsheet, but I'm definitely, if you're hopping on a call with me, we're going to be talking about how important it is to have QuickBooks in place and how QuickBooks can automate everything for you. And you're not sitting there filling out a spreadsheet at the end of the year, okay? Another document I want you guys to be aware of, but you don't have to say you know it, like you know the profit and loss statement, is the balance sheet. The balance sheet is just another document that shows the overall health of your business. It talks about your assets, so that's things you own, O-W-N, and your liabilities. That's things you owe, O-W-E, okay? And so the balance sheet and the profit and loss sheet are documents that you're going to use when people say, well, how's business going? And most of us will say, oh, business is great. Well, if you're one of my business coaching clients, which we coach a lot of new business owners, the first question I ask is, well, how do you know it's great? Tell me how you know. And you better be able to go to your profit and loss statement and show me how you know that business is great. And if business is tough and business is slow and business doesn't feel good, I'm going to say, well, how do you know that? Is it because you don't have customers this week? Or do you have numbers to support that business is tough right now? And these balance sheets and these profit and loss statements are what the banks use, what accountants use, what the IRS uses to determine the overall health of your company from a financial standpoint. There's other factors, but this is the financial. All right, so I am going to, let me go over this last document, guys, and then I'm gonna hop right into some questions again. Schedule C. So this is the document that I was saying most of you on here will file. This is the document that you will file that goes with your personal taxes, okay? That's very important. Can't tell you how many business owners come sit in front of me and say, hey, I'm here to file my business taxes, but they've already filed their personal. That's a problem, okay? So they go together. You wanna definitely seek a tax professional when you're dealing with a Schedule C. And this document is what we're gonna use to fill out what came in, what went out, all your deductions, and it's going to flow into your personal tax return. All right, I'm going to open the floor for some questions. Elliot, if you could help me facilitate again. Guys, I'm going to finish through these last couple of slides, and then we'll leave the rest of the time, as long as it's okay with Elliot, for you guys to ask as many questions as you would like. I'm fully all yours. Okay, so we just finished talking about the Schedule C, and is PowerPoint and Zoom perfect? Now let's talk about filing quarterly versus annually. I got that question this morning from another client. She's like, do I need to start filing quarterly? How do I know, right? So once again, these are all reasons why as new business owners, it's very important to have an accountant that you can reach out to. Let me mute. Okay, all done, sorry. That you can reach out to. So you do not have to file quarterly. However, that kind of goes back to what I said in the beginning. Should you file quarterly? It really depends on how much money you're making and how much money you're spending with your company. So what that means is at the end of the year, say that I think the threshold, oh, I have to check. 20, they change every year, but it's only a couple $1,000s. So like say you owe more than $2,500 to the IRS at the end of the year, you're going to get an underpayment penalty of 6%, meaning they had to wait all year to get their money from you. They don't like that. I got to check the threshold for you guys, but there's a threshold of what that amount is, that if you fall under that amount, it might be like $1,000. If you fall under that amount, the IRS could care less that you owe that amount at the end of the year. But if you waited all year long and you owe them $10,000 and you pay at the end of the year, they're going to hit you with an underpayment penalty. So what I like to do with my clients is every quarter, we sit down and we look at their books. And you might be freaking out and saying, Jarde, I don't have books. I'm just winging this thing, right? So what that means is every 3 months we would sit down and I would say, okay, what came in, what went out, what's left over? And based off of what's left over, we would determine whether or not you need to pay quarterly taxes. Because if there's not a lot left over, or you're upside down, meaning you're spending more than you're making, you definitely don't need to pay quarterly taxes. You only need to pay quarterly taxes when you're going to owe more than $1,000 at the end of the year to the IRS. Okay, that's their way of saying, hey, we want our money up front. You don't get to hold on to it all year. But I do have some business owners that they're like, I don't care about that 6% underpayment penalty. I'm holding on to my money all year. I'm investing with it. I'm using it to run my business. I'm using it as cash flow for my business. So if I have to pay a little penalty at the end of the year, I don't care. So that's the deal with quarterly taxes. You don't have to do it. You should do it. But if you don't, just be prepared to pay that little penalty at the end of the year on top of what you owe. All right. So we talked about how important it is to have your records in order. That's huge. So here are a couple of resources that I want you guys to be aware of. While we're on the call today, if you're not using QuickBooks, you can definitely download QuickBooks Self-Employed. That is the very beginning, starter, user-friendly level of understanding tracking your income and expenses. Guys, when you hear people talk about bookkeeping, it's just a fancy accounting word for what came in and what went out and where did it go, okay? So QuickBooks Self-Employed will allow you to connect your business bank account to the app, and it will track with you what came in and what went out, and it'll allow you to go right on the app and categorize it. So that when you sit down at the end of the year in front of your tax professional and they say, okay, tell me how much came in. You're not like, I don't know. You can look right at your app and see, okay? Now, like I said, that's the very basic level. If you're more than 6 months to a year into your business, you should not still be on QuickBooks Self-Employed. You should have graduated to QuickBooks Online, which is the next level, and it helps you to understand how to create a profit and loss statement, how to create rules and automations so that you don't have to touch your books every day. And we offer bookkeeping services as well. We offer services where we teach you QuickBooks. We offer services where we do your QuickBooks for you. And we offer services where we advise you on how you did your QuickBooks, meaning you're doing your own bookkeeping all year, but you hop on a call with us every single month for us to look at your bookkeeping and to make sure it's accurate and for you to be able to ask questions. So if any of that sounds interesting to you, feel free to book your consultation in the chat. Excel spreadsheets. So that's what I gave you guys earlier. You certainly can use it, but when we're talking about dealing with the IRS and an audit, that's not high on our priority list of good record keeping because you're keeping it yourself. There's no documentation that is accurate, whereas QuickBooks is absolutely accurate because it's connected to your bank account. And last but not least, a tax professional. So a lot of you may have been doing your taxes on your own, and I get it. When you're W-2 employee and you have a job, there's nothing else crazy going on, yeah, hop on TurboTax, go to the other guys. I'm not going to mention their names on here. But when you're dealing with self-employment income, there's so many strategies to help save you money and get you money, that you definitely want to be dealing with a tax professional. So how do you know if you need a bookkeeper? I get that question all the time. How do I know? Well, the question that I have for you, I'm going to push the question back on you. Do you know how much money your company made and how much is spent in 2023? If you do not know the answer to that question, I'm going to say that you either need a bookkeeper or some type of bookkeeping services to help you be able to manage that. And so at the end of 2024, I can ask you that question and you're easily able to tell me how much you made. If you do know the answer to the question of how much you made and how much went out, maybe you just need advisory services to help advise you on, now that I have these numbers in front of me, how can I use these numbers to make accurate decisions for my business? For example, how do I know if I can afford to hire someone? How do I know what my marketing budget should be for this year? How do I know if I should be paying quarterly taxes? Well, all of this is information that a bookkeeper and an accountant will help be able to help you decide on once we see your numbers from what you've been keeping in your books. Okay. Oh, I almost forgot about this. Are we good on time? 11:49. Okay. All right. So this is huge. You guys may have heard about this on social media. You may have heard about this on the news. This is a big thing that we didn't think was actually going to happen in 2024, but it's here. The Beneficial Ownership Information Form. So I'm just going to go do a quick rundown, what it is and why and what you got to do. So any LLC that was created after 2020, AKA all of us new business owners, right, that made 5 million or less, well, the federal government wants to know who you are, where you live, and do you actually own your business? Why? Well, I'm just going to call it what it is, because there were so many scammers. All that money that came out, the PPP, the ABC, the stimulus, the PUA, all that money, the government couldn't track it because they didn't have accurate information for who actually owns these businesses. So their way to recoup is to put this law in place, which says that you have to fill out this form this year. So I highly advise you to fill it out when you do your taxes. And all it's asking is who you are, where you live, and who owns the business. But it's a part of the Corporate Transparency Act. And the most important thing is if you do not file it by January 1st, 2025, so by the end of this year, there's a $500 per day penalty that will be assessed to you if you don't fill out this form, okay? This form is for anyone who has an LLC. You have to fill this form out. So if you're gonna get on a call with me and say, Jarde, do I have to fill out this form? I'm gonna say yes, you do. Unless you made 5 million or more, if you did, you wouldn't be sitting on this call with me. You guys are probably going to make that, but we're not there yet. Yes, you have to fill out this form, okay? And you can fill this form out on your own. Did I put the website up here? Yeah, the website is at the bottom, thinfin.gov. It's pretty simple, but a lot of people have been nervous about it and have been paying a professional to help them. So we do offer that as a service as well. I think I got to double check, but I think ours is like $200. And we fill the form out for you and we get you your documentation that you need. But this form is absolutely mandatory for every single person on this call. If you have an LLC, you have to fill out this form this year, okay? Oh, we're done. Yay. All right, so this is the final wrap up. So I just want to make sure you guys easily know how to reach us and what services we offer. So this is our services list: individual tax preparation, business tax preparation, and strategy. That is important. We're not just plugging numbers, we're strategizing with you. Bookkeeping and accounting services, LLC formation, S Corp formation. We have an amazing business coaching program, which I'm very passionate about, and I love my business coaching clients. It's a 6-month program. And last but not least, real estate consulting and investing. As you guys see, we invest in real estate often. So those are the services that we offer. We are your one-stop shop for all your financial needs. And as I wrap up, I want to make sure you guys, at least if you don't do anything else today, make sure you guys are following us on Instagram. We give a ton of free tax, bookkeeping, and just business information every single day. So if you're following me on Instagram, I did a video the other day that literally showed you how to fill out that form on your own. Okay. So when I get off this call, if I don't get anything else on this call from you guys, I want to make sure that I have a bunch of follows. There's about 50 people on here that you guys are following our Instagram page so that I can connect with you guys personally and so that you guys can be up to date on what's happening, what tax laws are changing, LLC stuff, all that stuff. Our website is there, inthemoment101.com. Our tax consultations are free only during tax season. So from January to April, they're free. After that, you have to pay a fee. And there's actually a promotion. What's today's date? Through January 15th. Okay, so you guys are ahead. There's a promotion going on right now that if you book your tax consultation before January 15th, you receive $25 off your tax services. And last but not least, that's our phone number. If you text that phone number, it actually comes to me. It'll come to me and my team, and we will be able to get right back to you. You can call us too, but I prefer text. And that is a lot of talking. I think I am done.